Okay,
So all the, yes.
no, go ahead. What were you going to say?
No, on the 15-minute chart, as I look at it, so I can see that the silver made a mitigation, then it's consolidating. So
We're current price action.
yes, the current section. I guess it's
Yeah.
around
So if we zoom out here on silver, there's the. Before I say anything more, do we understand why I am anchoring from this swing low and this swing high? Do we understand that?
from what? Please come again.
This is a swing high, which is
Yes,
this swing low, which is basically both swing highs because both charts are, uh, the one's just inverted, right? So that's actually a
yes.
swing high, but because it's inverted, it's a swing low. Okay. Do you
Okay.
know why I am anchoring from that swing point on both charts?
This is 15 minutes, right? I guess this is what the high of the last week, I guess. Yes.
Well, it's not, I don't know what high it is. It could be yesterday's high, Monday's high, last week's high. It doesn't really matter. All that we need to understand is that it is an old high, right? So it's a swing point, and then everything inside of this range and this range is that swing point's internal range liquidity.
Okay.
Sorry, I'm just going
Right.
to have to mute you. Divakaran, you said that my speaking is very soft. Can anyone else say the same thing? Is my speaking or my voice very soft?
No, I can hear you clearly. I don't know about the other guys.
Okay. Okay, so anyway, we are using this swing point and this swing point because this is the range of liquidity that are currently working within, even though that gold has broken this high, silver has not broken this low, and we are currently trading inside that range liquidity. Now, obviously, when you are looking at SMT, you can find probably a lot of SMTs all over the charts, but the more you do SMT on the lower time frames, the more setups you are going to see. And just because there's a setup there doesn't mean that it's a valid trade. So when you are looking for an SMT setup, yes, you can use internal range liquidity of a swing high and a low, but it is best to use some kind of confirmation in conjunction with or in addition to the SMT. So yes, there is this swing high over here and there is this swing low over here, which represents the internal range liquidity. But at the same time, when you are looking at the gold chart, this gold chart has that sort of confirmation that there was that imbalance over there at the time. So that would be your confirmation part. So when you're looking at SMT, you're looking for non-symmetrical price action. Okay, so if we remember non-symmetrical price action, Roger, are you here?
Yeah, I'm here, Darren.
Okay, so just to remember what we learned already, uh,
Yeah.
let's say that over here, this is 1.1 over here. Okay, so of 1.1, and if that is whatever, maybe that's the GU, EU, or maybe that's the DXY, who knows? Okay, what would be the non-symmetrical move of this 1.1?
So if is that versus Dixie versus GU? So
Well,
if Dixie's making,
it doesn't matter, Roger. Like this could be the Dixie that we are looking at over here on 1.1,
yeah,
or it could be GU. It doesn't really matter. All that we need to know is that what is the opposite non-symmetrical pattern to this 1.1.
yeah. So if Dixie was making a, what's that? Just give me a second. Then someone just came in. Just let them go out. Okay, so if Dixie's making a lower high, um, yeah, I'm just a bit confused there. I'm just getting a bit bummed out there.
Okay, no, it's fine. Does anyone else want to try? Maybe Emmanuel?
Yes, it's okay. If if 1.1 is making a high low, so I guess the invert of it will be the non-symmetrical, it will be a breaker on 1.1 or equal lows.
So when you say a breaker, bullish one, right?
Or the non-symmetrical will be invert of that, isn't it? It will look down like a W, but with a high low. Yes,
Like this.
yes,
Okay, so that would be the possible scenario, or like you said, it would be equal lows.
yes,
So one of those two patterns is 1.1 over here.
yes,
Okay, so this is why we are really just looking at this over here, because when you learn SMT, you can later do it on candlesticks, but to start off with, it's best to do it on a closing price. And if you quickly familiarize yourself with the closing price and the line chart, then by all means go over onto the candlestick chart if you've already happy, or you can stay on a line chart. You don't have to use a candlestick chart either. It's really up to the user as to what they're going to do. Okay, so yes, this is going to be either if the 1.1 makes a mitigation, then we are anticipating a turtle soup on 1.1's non-symmetrical move or equal lows. Now, if we're looking at over here for 1.2, okay, don't we think that if this was the higher low, then what would be the opposite of a higher low if it was non-symmetrical?
the opposite of high low, it will be lower high.
The opposite of higher low, lower high.
Yeah, I guess it will create a breaker too, because those it will create it will create a breaker too.
So
Or equal, yeah, or equal high.
like that.
Yes,
Okay, correct. Yes, that's 100%. That would be a non-symmetrical move or equal highs.
highs. Yes.
No, notice how there's only 3 patterns, right? But of the 3 patterns, there's 6 of them, because if you think about either you're going to sell or either you're going to buy, then there's bullish ones and then there's bearish ones. So there's 3 in total, but because there's buying and selling, you can have 6 in total.
All right.
Okay, so that would be 1.1 and 1.2 over here. Now going on to number 2, so let's just say this is 2.1 over here, and if this was whatever GU or the DXY, and this made equal lows over here, what is the symmetrical move to equal lows, Roger?
Equal highs if it was Dixie versus
Yeah, exactly. So the
GU.
symmetrical move of equal high lows is equal highs, right? And is that SMT, Roger?
No.
Okay, it's not. It's not SMT because it is
It's
symmetrical.
symmetrical.
Exactly. So we would like to see for a non-symmetrical move either a breaker like this kind of setup, or a similar one where it mitigates like this, up and then down and then failure swing. So over here is the non-symmetrical, and over here is the symmetrical. And we don't care so much about the symmetricals because that's not SMT. We are trying to hone our or sharpen our eyes to only find SMT. Okay, because for the most part, whatever we, copying or mirroring, whether it be gold or Bitcoin or whatever asset class that you want to do this on, you want to look for times when it's non-symmetrical, and it's not going to happen all the time, and a lot of the time it won't happen. Okay, but it's a good confluencing factor that when it does happen, it makes a good setup. Okay, so this over here is our setup for non-symmetry, and if we had equal highs, the symmetrical to that would be equal lows. And that again is not SMT. So in order for us to get SMT off of equal highs, we need to either have a breaker or some kind of mitigating move over here. That would be the opposite non-symmetrical move of equal highs of whatever you're trading. So when you compare the two asset classes, that's what you get in response to 2.2 over here. So that would be 2.2. Equal highs non-symmetrical move will be a lower low or a higher low. So higher low is mitigating, lower low is turtle souping. Okay, so if you want to classify them, well, the one is just a breaker and the one is a mitigation. Okay, this is in terms of structure. Okay, so moving quickly and swiftly on over here to number 3.1. If this is a breaker and if this is the DXY or GU, doesn't really matter. We are looking for what? Thivakaran, are you here? Okay, he's not here. Okay, so if we got a higher high.
Darren, I'm here. You were able to hear me now.
Okay. If we were looking at an asset class that gave us a higher high, like it does over here in 3.1, is this a SMT setup?
No, this is a symmetrical setup.
A what?
No, for this, the SMT would be equal lows.
I was trying to catch you guys because what I did here, I did a higher high and equal highs. Because it should be opposite. So if the one is making highs, the one should be making near lows, right? So this is wrong. I'm trying to see if you guys are catching on to this. Is this, what is this? Is this SMT?
Yeah, this is SMT.
Okay, and is this SMT?
The other one should. No, I think this is not SMT. The
Exactly.
mitigation would be SMT.
That is not SMT over here. This, what is this, Divakaran?
Yeah, this is SMT.
This is SMT, correct, because we got a higher low and a higher high for 3.1 over here. So I tricked you to see if you were paying attention, and it seems that you were, because if we were looking at a higher high, we can't get equal highs because it's, the one must be high, the one must be low. So when you're looking at a high, you're actually looking at a low on the opposite end of the spectrum. So it seems like most of you sort of can catch on to the idea that this is SMT and what it is to look for it. But really, I would suggest to anyone that's either in the chat or that is watching the recording is to actually go and practice this. And I would suggest you practice it on all time frames, whatever preferred time frame you want. But obviously, the higher time frame has more influence of price, but generally if you do practice it on a lower time frame, you see it more often, and therefore through the exposure of seeing it more, you become more proficient with identifying it on your chart. So I'd really recommend trying to do it on like a 15-minute or a 1 hour, because you're going to get like 3 or 4 times a day where it's going to happen on whatever you're trading. And, you know, looking at it so many times per day, that's going to increase your experience with this, because exposure through experience, and experience comes from exposure. So that's really where we need to be with this over here. So quickly, let me just draw a rough sketch over here. So this is probably for you, Alex, if you're watching. This is sort of what a candlestick would look like, and this would be based on my chart coloring system. This would be a bearish candle, right? So this is the OHLC. Anyone know what OHLC stands for?
Open high, low, and close.
Exactly. Open, high, low, and close. So on a bearish candle, obviously sits over here, the open, okay? And then obviously over here sits the high. And depending on, maybe it closed at the same point, but sometimes if it didn't, then there might be a wick. Then we would say that that over there is the low. But sometimes, you know, it could close basically right on the body. And that's just, sometimes that happens, but you just have to know that somewhere the low could be the close, and sometimes the low is also a wick, or the high can actually close sort of as a doji, and then it would just be looking like a doji candle. So that's the high, the open, the low, and then over here would be the close. Okay. Okay, I know most of you know this, but it's just important for SMT as well over here. So if this was a bullish candle, and based on my coloring system, this is a green candle, maybe there was a little wick there, it's really the same thing. What is the difference, Roger, for this bullish candle? Where does it open?
The one you just drew now, Darren. So where does it open? So you're asking the open of this candle, right?
Yeah, so if the open
Yeah,
on the
that's the
bearish candle, if the open on the bearish candle, okay, where is the open on the bullish candle?
So I would say at the bottom, Darren, yeah, so it opened, went down, created that small little wick,
Mm-hmm.
and then went all the way up until the high, and came down where the bodies, that would be the close.
Okay, so we're saying then that this is still the high, right?
Yes,
And this is still the low, right?
correct.
But
Yes.
where's the open? Is it up top over here or at the bottom?
It's at the bottom. So it opened at the bottom, then first created the low, and then it was a bullish move all the way up until the high, and then there was a retracement up until where the body is, which is the close.
Okay, perfect. So moving on now, understanding that generally, you know, the market's moving pretty efficiently. Bearish candles are going to open and then move lower and close lower, and bullish candles are going to open at the low and close near at the top. Okay, so the close and the open are different on bearish and bullish candles. It's important that we understand this simple, you know, just trading basic. Okay, this is not something I should teach you. This is something you should know already. Okay, and if you don't know this, then you need to do some more digging with your candlesticks and understanding, you know, just the basic mechanics of the market. I'm not going to spend too much time on this because I need to move on here. But let's say we have a move like this, right? And there is just a rough depiction over here of this down candle, and maybe there's a little wick here, a little wick there, and then it is preceded by a candle over here like this. Okay, something like that. Okay, so if that is this, whatever this is, let's say this is the DXY over here. Okay, this is the DXY making a bullish move to the upside. So if this was the DXY over here, and let's say this is GU over here, okay, what would I be looking for if it was moving symmetrically? Guys, anyone want to answer?
A bearish order block.
Okay, so symmetrically speaking, okay, we should get the opposite. So for example, we've got a green candle because it would be opposite to that one. Okay, like this, a little bit of a wick, we try to make it as identical as possible. And then over here, instead of that big green candle, we got a big black candle, bearish candle. Okay, so when you compare the two, the DXY and the GU, they are currently symmetrical, right? That is symmetrical, right?
Yes.
Perfect. So if we understand symmetry in the marketplace, okay, what happens if the preceding candle on either the DXY or GU does the following, where GU comes in, opens over here, and closes this, maybe this void over here that existed. Maybe there was like a void there, or we could say that there was maybe like an order block or something like that. Okay, but on the DXY over here, price sort of did something like this, and over here there's like this opening over here, porous price action. Is that symmetry? Is it symmetrical or non-symmetrical?
I would
I
say
guess
non-symmetrical.
non-symmetrical.
It's non-symmetrical, because if it was symmetrical, then the DXY should have done exactly what GU did, and then, you know, come in and close. Obviously, if we think about how this works, guys, not every candlestick's going to look identical. There's just times when, you know, there's certain characteristics that's visible on the chart that's easy to identify where it's not moving symmetrically. And this is really just a crude or rough depiction of a time when it's not. So what is the anticipated move over here? Is the GU going to sell? Is it going to buy? Is the DXY going to sell? Is it going to buy? What's going to happen? What do we predict from having witnessed this?
I would maybe anticipate Dixie to come and close that void, and then that could create a sell-off in GU, or yeah, unless GU is held in consolidation or something like that.
Sort of. It's not really the correct answer. So if we look at over here, when this sort of move occurred and there was this opening of price action over here, GU closed that price action over here.
GU should buy. Did I say sell-off? Yeah. Anyway.
Not sure, Roger, but either of whatever you said now was confusing. So you said it was going to buy. Anyone else want to suggest? Emmanuel, is it going to buy? Is it going to sell?
I think it's going to sell.
You think it's going to sell?
I think so.
Yes, you're correct. GU should sell. Okay, because if the market was moving symmetrically, then this gap over here on DXY should have filled, but it didn't. Okay, so if we were to think of SMT drawing the arrows and thinking of this structure over here, the one closed the void or tested the order block, and the one did not. So there is SMT in this as well, if we were to connect the the dots over here, that from this area here is a higher low and a mitigation. Do we see? The one mitigated off the order block and closed the void, and the one did not. So there is SMT in this candlestick pattern. This is really the same thing as the structure that we see over here, where price on GU, or sorry, the DXY, would have made a low like this and then moved higher, tried to come in to this zone over here and failed, whereas GU sort of made the equal part of that. So if we look in reverse, what did GU do? It moved higher, lower, and then mitigated. Maybe there was that swing low there, and then it mitigated. Whereas that one didn't, because it didn't mitigate, and here it mitigated. So that reading candlestick patterns is also SMT. So I'm showing you two variations here. I'm showing you in terms of structure, but I'm showing you SMT in terms of the candlestick of where price is and isn't. Okay, and I'm going to show you this on the charts as well, because it's just going to be easy to see. Okay, and this is how I trade as well. Okay, really the same thing. So we can go to a higher time frame, and okay, my charts have got some stuff on, but it really doesn't matter. This is GU because I trade GU the most, but let's just look at it from a weekly quickly. Okay, so what I just said about candlesticks looking and trading similar, symmetrically speaking, this over here is the area of interest. Why is this an area of interest, guys? What is this?
It's an order block, weekly order block.
Okay, yeah, sure. We could say that's an order block. Okay, so the low, the open, the high, and the close. So symmetrically speaking, when the DXY trades over here, or sorry, let's just first start here. So when GU is trading into the order block of the low, what is the opposite of the low of this order block on the DXY?
Is it high?
Okay, so we've got the low of the order block and the high of the order block. It's the same candlestick, but this low or this open is this one's close. And if I'm looking at the high, the wick, what am I looking at on GU?
Low.
The low.
Exactly, guys, exactly. So you're on your way. You're already starting to understand this. So when I'm looking at the high of the DXY, I'm looking at the low of GU. When I'm looking at the what? What is this? The open? I'm looking at the open. When I'm looking at the close, I'm looking at the close. It's the same thing, open, high, low, and close. The market is generally symmetrical, so when one trades into the other, we should have symmetrical market moves. However, when GU was trading into this order block, coming into the open over here and coming into the close over here, so these sort of two zones over here, what was happening on the DXY? Guys, what's happening on the DXY? When GU is trading into this candlestick's open and close, what is happening over here? I'm sorry, let me just put that there like that. What is happening?
Well, we can see that dollar did not trade into its low and close.
Yes, it didn't. Okay, so then what does this look like? So this one over here, when it's trading, okay, this one is trading into it and this one isn't. So this open is this close. So if we connect the dots here, this one is mitigating. It's trading straight into it. Why? Why is it doing that? The pattern is the same, right? The arrows are pointing up, or the red line. What does that look like?
SMT.
Yes, it's SMT, guys. That's SMT right there. Although it's not in terms of like structure of M patterns and breakers and Ws, this is SMT as well. And this translates, if you're reading a 5-minute chart, a 1-minute chart, whatever chart you're reading, you can see SMT. And this is how, well, one of the ways you can read it. Okay, this isn't the only way, obviously, because you can use closing price as well. And, well, obviously, if it was closing price, then both GU and the DXY wouldn't have come in over here, because it wouldn't have closed there, because you can see now it's not closing there. But in terms of where price did trade in the wick, you can see that it's over there. So then if we look at, for example, I know there's a lot of people in here that like to trade the euro. We'll see a similar thing. Okay, so look at that. This, Roger, you did this exercise the other day where we saw that this void over here was being closed. So let me just clean up some of this stuff. So this void on the weekly was closed, but this void on the weekly remained open. So if the market is moving symmetrically, then here we can see that there's this down close candle followed by an up close candle, which is an up close candle followed by a down close candle. So symmetrically speaking, they followed price action here, where the one made a bearish order block and the other one made a bullish order block. Whether or not that's a bullish order block, that's a story for another time. But we can see that it's moving symmetrically. Whereas over here, when the DXY came to close this void here, if the market was moving symmetrically, then why did EU not close this void? And the fact that it did not, the market is not in symmetry. So that means if we're in a premium and above highs, what is EU under? What do we classify EU being under?
Is it a discount?
No. We classify EU as being in distribution because they're going to distribute the highs. Why do they distribute the highs? Because that's where the buy side liquidity is. So they exit positions that they took possibly down here to get price higher in a premium, and then they will look to sell again. Okay, but first of all, they are exiting above the highs. That's scenario one. Pairing up buy side liquidity for their positions that they took. So when they exit their trade, just like when we exit our trade, if we take a buy down here and we exit the trade, that's a buy position when we've taken profit on the buy, but our broker is selling that buy to us because when we click X on the trade and we've closed it out in profit or whatever, that buy is actually a sell to the broker because someone has to take that buy from us. And if they're buying it, they have to sell it. So for every transaction, there's another transaction. So your buy is someone else's sell and someone else's sell is your buy. All the orders are paired together. That's like the whole mindset behind the IPTA data range. Okay, guys, so 1 second. I'm going to send a new one. Okay, so that is what we understand about when the market is in distribution. We are looking to sell above the highs, and when the market is in accumulation, then we are looking to buy in the discount because they accumulate the lows in the discount to buy, and they distribute the highs in the premium to sell. So distribution, short positions and selling, accumulation, long positions and buying, discount and premium. That's the whole smart money concept. Okay, thinking like a market maker. Okay, it's not the bullish, bearish order blocks in the discount and the premium, and then we're going to sell a bearish order block. No, it's not like that. It's not like that at all, guys. If you can understand this, then you can read market manipulation. If you can read market manipulation, then you have better insight than the average person who thinks that they are trading smart money concepts, or SMC, as you've probably seen on YouTube with 1 million views. Nobody understands that. So when they think that they're watching a video on smart money concepts, it's not. They are not reading market maker theory, which is this, what I'm showing you right now, which is manipulation. Okay, so if you can understand manipulation, you will elevate your trades. How do we elevate our trades? Well, you have a criteria that you look for, you have a journaling and a system to trade, and you keep taking the same trades with similar outcomes over a series of time. You will make money based on risk reward that's positive more than 1:3. You'll have no problem using this manipulation sort of theory of institutional market structure, as ICT calls it. This really is institutional market structure. So does anyone have any questions regarding what I'm showing you right now? Because it's all very well, I understand it very easy and I can explain it very easy, but do you understand what I am explaining? That is the question. Does anyone have any questions thus far? Go ahead, Tivakaran.
Darren, I understand this SMT patterns, everything. But my doubt here is when in EU, right, the stock hunt or turtle soup that you have shown, right? So on that point of time, how can we 100% say that's going to be a turtle soup? Because price can still go up and fill that block void, right?
Of course it can. Yes, but the DXY has already done that. It's already traded to that objective, whereas EU had, if you look here, so if this was the first week that the DXY closed this void, don't you think that from this 3 weeks, this void should have also been closed?
Okay. Because I have the same question on the above also. So on DXY, it has already done that actually. Okay. But there are chances that it can again come to that level and shoot up, right?
To what level? Which on this pair? On EU, right?
No, on DXY. On DXY, whatever the lines that you have marked,
yes,
it is already filled now.
Yes.
But again, it can still further come down to take more orders and then go up, right?
Oh, of course, there's always, doesn't matter what I show you in the marketplace, or doesn't matter how much you understand SMT, doesn't matter how much I try to think I understand SMT, you'll always get humbled by the market, and that's where the risk element comes in. Doesn't matter what I show you, doesn't matter if you were doing one-on-ones with Michael the GOAT himself, he will still get humbled. And that's where the risk factor of whatever we're doing comes into play. So it's not because I'm showing you this now that you can think you can take 10% risk per trade. Hell no. The same approach, the same risk strategy is in play. The only difference is you're looking at it in terms of live price action, and you are using an intermarket analysis to tell you to take a trade. So if this is the SMT part, I'm not showing you, order blocks or void or anything like that. You'd have to do that yourself, because this is SMT, right? So if we go to the chart on EU, for example, over here, right there's that zone, right? So that's that same zone marked out where we've got this weekly void over here. over there. There's the weekly void that we see on the DXY that EU didn't close. Okay. And here we got that sort of consolidating point that you can see on the daily, where there's all this accumulating of orders trading sideways, right? So
Yeah.
above this consolidation would sit liquidity anyway, right? And it's come from a low and it's made a high. So is it accumulating in the discount or accumulating trading style? Well, I say accumulating, but it's consolidating or compressing, whatever terminology you want to use. Is it doing it in the premium or is it doing it in the discount?
From the whole swing level, I would say this is accumulating from the discount.
Okay, so from the higher time frame, if we zoomed out here, obviously it's come all the way down here. Okay, but in terms of the current trading range over here, from where we are right now on this daily chart of this low to this high, this is this trading range, and over here somewhere would be some equilibrium of that range, and this is the premium part of that range. Okay.
Yeah.
So if price turtle soups outside of the range, we look to reverse. Yes, by all means, it could go up here. Yeah, of course, I'm not disagreeing that this void is an open target for price to come into. I'm not disagreeing definitely with that. But understanding SMT in relation to your PDA, in relation to your order block, in relation to where we are in the discount or the premium of a given trading range, what is the likelihood of price going up into closing this void? Okay, so if we look at this daily candlestick that's just being created over here, we'll see that over here there's sort of a daily void over here, and then we could say that this is the last up close candle before raiding this liquidity pool, and then price, boom, it drops, you know, down into some sort of discount of that particular trading range. So if we look at, for example, now the daily chart, we can do the same thing. Okay, so this looks what?
Turtle soup.
Turtle soup what?
The liquidity that in Euro USD. In Euro USD, the turtle soup above the highs. Yeah.
Okay, yeah, sure. But in terms of the price action that is occurring right now in the last 4 candles over here, what sort of structure do you see forming here? Is it something that you'd look to buy? Is it something you'd look to sell? What?
Looks like a sell.
Sell what? Sell DXY or sell EU?
No, sell EU.
Sell EU. Why are you going to sell EU?
Because it has collected a liquidity on the, that's why the rejection block is there. Yeah. So
Okay.
when price comes again to that rejection block, right? There is a, because the stop loss hunt is already done and the rejection block is also formed, there could be, it could be a high probability setup where price go to that region of rejection block and again fall down.
Okay, so if we go from the top down, okay, let's skip the monthly. If we go from the top down, when this one raided the liquidity of EU,
okay,
and closed the void on the DXY, we did not have symmetry on the DXY with EU. Okay, because
yes,
the DXY closed the void, but EU did not. It then turtle souped the high, okay,
yeah,
in a premium. So in terms of the overall move of the market currently, I would still say that there's no evidence on the DXY that this weekly chart is bearish. Does anyone disagree with me?
okay, it could be a pullback.
Yeah, it could, until something else significant happens, maybe a void down, breaks the low, or something else that's not right now on the chart happens, I would still think that this is a bullish chart. Because what? It's been expanding higher, and every time over here it retraces, it just trades higher, and it hasn't broken any swing lows that's significant. It's really just retracing into inefficiency right now over here.
Okay.
Obviously, I could be wrong. Okay, so maybe I'm wrong, maybe I'm not. Who knows? But anyway, from what I can see on the price action, when the fact that this void over here was closed on the DXY, EU was not closed, this is a bearish signal from SMT by itself. Okay, and obviously when price traded above these highs, this void over here is inefficiency. So this in itself is a sell signal by itself. Either you buy into it or you sell from it, obviously. Okay. Yes, now it hasn't closed, but this one has.
Yeah.
So based on the weekly, we can say that there's a weekly signal that it should sell. Now, based on the daily, when the liquidity over here was taken, okay, we can see the liquidity of the same lows taken on the DXY. That is symmetry over here, right?
Yeah.
Okay, so
yeah.
what we are saying is that, well, if this one closed the daily void, why did EU not close the daily void if the market is symmetrical?
Yeah.
Right?
Yeah.
Okay, so the same mentality can be said about when we look at structures, and what we've just learned about SMT, we can apply it to candlestick charts or what they look like and try and reference them. So this one over here, there you can see that if this was the bullish order block we were looking for over here on the DXY, then this would be the opposite of that in the bearish format. And you can see that this one or both sides have symmetrically traded into the daily over here. So currently the symmetrical structure of this over here is, symmetry, is currently symmetry. However, if one does what the other one doesn't, so like you said, Tivakaran, that this up close candle over here would represent some kind of rejection block, right?
Yeah. Yes.
If that is the rejection block of EU, then surely this would be the rejection block of the DXY, right?
Yes, agree.
So let's say hypothetically that for the rest of the day we do nothing and we just watch this price action, and one of them trades into the rejection block. I don't know which one, maybe the DXY trades into rejection block or EU trades first, but it's not symmetry. It's not symmetrical. So while the one is doing it and the other one isn't doing it, that is SMT. So let's say that DXY trades lower now into this rejection block, but EU over here sort of just consolidates over here in this range. Okay, so let's say trade sideways over here on EU. And DXY trades into this rejection block. So at the time that it's trading into this rejection block over here, is it trading EU into this rejection block? If it was symmetrical, then yes, it should. If it's non-symmetrical, which is SMT, then that is a non-symmetrical move. So then therefore, if DXY trades into the rejection block and EU does not, what signal is that?
That's a selling signal for EU.
It's a selling signal for EU.
For EU, yeah.
Exactly, because this rejection block is lower high or equal high, and this one is lower. That same structure. Okay? It's the same structure of what I just said about EU. So this is how you perform symmetrical versus non-symmetrical analysis. This is a confluencing factor. So already what you know about order blocks or voids or how to pull a fibs, all of that, I'm not changing anything, nothing about that's changing. We are just employing SMT as overlaying confluence factor into a decision making process as part of your trade analysis. So whether you want to be a buyer or want to be a seller, so maybe you look at the 4-hour chart because daily is a bit slow over here. there is a void, which is seen over here. This void has closed on the DXY,
Correct.
and EU has not closed. Oh, that's pretty interesting. So what is that?
Sell on EU.
Sell on EU. Right?
Yeah.
Correct.
Okay, well, there you go. There's a sell on EU for you. Thanks. So over here,
Thanks, Darren.
So, so is
what's that?
Is it correct or wrong? Sell on EU.
Sorry, what's that?
No, sell on EU. Is that correct one or?
Is it current?
No. I'm asking you when you asked, right? What is that? I responded it as sell on EU. So I'm asking, is that correct or wrong?
Oh, when we were talking about this void over here that exists.
Yeah.
Okay, so you're correct, because you can see here that if I pull this from that low, which is this inefficiency over here, this one closed it, right?
Correct.
Whereas this one did not.
It didn't close. Yeah, it didn't close. So the understanding is on that place, EU is on maybe accumulate and then distribute.
Yeah, maybe it could sell. That's a sell signal by itself right now.
Yeah, okay.
Because it mitigates there.
Well, yeah, it mitigated. You can see there that the DXY traded and closed the void, but
Yeah,
I
yeah,
did
yeah,
not
yeah.
over there. So if I just
Yes.
remove this little purple line here, red one rather, I draw them symmetrically like that. This here is the same void as this one over here. Okay, so then sort of you can't see that here for some reason there's a missing candle over here, but I would imagine that this would also maybe be like a, I don't know, up close, maybe a doji candle, whatever reason there was that this candle's missing. But you know, really the same thing applies, and you can do this all the time, right? So let's have a look here if we see any others. Does anyone see any others? And it obviously, it doesn't have to be voids only, guys. It could be the open, the high, the low, the close, the order block, the mitigation, anything. Any array that you know how to use can be SMT'd, if that makes sense.
Okay.
Anything, guys? No one see anything on any of this chart here?
The red candle on US Dixie.
The red one, this one.
No, I mean whereas the other kind of non-symmetrical movies. 1, 2, 3, 4. The fifth candle from the current candle.
1, 2, 3, 4. This one.
Yeah, that red candle, right? Price. Yeah. So now in Dixie, price has at least come to the open price of that red candle. But the same is not happening on Euro USD.
Exactly. So it really depends on what time frame you're looking at this SMT from. So in terms of the perspective of what you're going to see on the 4 hours, the 1 hour, the 15-minute, there's going to be tons of SMT, because once this opens your eyes to this concept, you're going to see it everywhere. But the filtering process of which direction to trade must always come from the higher time frame, because often I still sometimes get devil's advocate where I see that I want to sell, but at the sell there looks like a buy, and then now like I get confused. But I just go back to my roots and I say that where I'm selling from is higher time frame. So whatever occurs on anything lower than this higher time frame, I don't care, and I'm selling. If I'm wrong, I'm wrong. That's just the whole filtering process that you'll have to go through, unfortunately. Okay, and obviously this is a 4-hour chart, so there's a bit more SMT here, but obviously as you go down to like a 1-hour chart, there's going to be even more SMT all over the place. It's just a case of You know, where are you looking? What are you using from the higher time frame? And is what you are using a good or bad reason to take the trade? So over here, let's have a see. So this is sort of that 4-hour zone that we've marked over here. And if this was the 4-hour zone on the DXY, then this is the 4-hour zone on EU. Like we've said, that the market is moving as a mirror image, and if there was a mirror image, then the one should do what the other one does or does not, and if it does not, then it is a non-symmetrical market move. Manuel, you got your hand up. Go ahead.
Yes, as you were explaining about the two FVGs, that one could close and one did not.
Yeah.
So as you said, that it's a sell signal. So from there, let's say on EU now, according to everything that you teach us, I can see that as the Tivakaran was saying that the fifth candle that went to almost close the efficiency on a current price, right? So on EU, what we do, we wait for the void to be closed as well as DXY did, or we just look for a current price action to sell.
You are going to look, I'm showing you SMT right now, guys. This is what I'm showing you. So you don't only take trades on SMT. You're going to couple the SMT setup with like
with some confirmations.
Yeah, like a 4-hour order block or a daily void that gets closed or a weekly rejection block or some other confluence is not only SMT. You could use COT data if you wanted to. You could use seasonal tendencies, but for this, I'm just showing you right now SMT. So if that's the confluence, then your confirmation is going to come from whatever's in your PDA. And also it depends on, you know, what time frame you're trading. If you're trading on like, you know, 1 hour and 15 and 5-minute charts, then you're going to maybe look for just setups for the session or the day or today and tomorrow. Whereas if you're looking long-term bias, then you're going to go a lot to the monthly and the weekly and the daily charts to give you long-term bias, right? But, you know, if you learn how to use SMT, that too, not only coupled with, you know, low resistance liquidity runs, order blocks, voids, all of that jazz, what you've learned already, the SMT is the overlay of the supporting reason. Should your bias be bullish, should it be bearish? Does SMT also confluence with what you see on that order flow? And obviously order flows on the 4-hour, order flows on the 1-hour, order flow on the daily, weekly. You can establish an order flow, use SMT to say, yes, it's good, it looks right, it looks either symmetrical or non-symmetrical. If it's symmetrical, that also can be good because the market is, if the order flow is bearish and the market is symmetrical, then it's bearish on both. Or bearish on one, bullish on the other, or bullish on one and bearish on the other. If it's non-symmetrical, that's fine too, because then you know that there's manipulation occurring. Okay, so when we look over here as well, I can see another one. If I'm looking at the highs over here, right guys, what am I looking at on the DXY? The highs over here?
Lows.
The lows.
The lows. So what do we see happening here? What do you see?
The DXY hasn't taken those lows.
Okay, and on EU, what did it do?
It's taken these lows.
Okay, so if this is a void and an inefficiency, right?
Right.
This is an inefficiency, so it's a confirmation maybe, right? That needs to be balanced out to some degree, right? Maybe be full rebalance, half the rebalance, 25% of the rebalance. Either way, that should be traded to, because it's inefficiency, right? So if that's an inefficiency, we can confirm or use it as a confirmation that that is like a sell signal or a target to exit a buy that we took down in the discount. So if that's a reason to exit a trade, it's also a reason to enter a trade. So if we were entering a trade and we use this as the confirmation over here, then this not taking these lows is the confluence to suggest that it could sell from here. And what's nice about this is that if we look at the price action of this, when you trade something like this, your stops can be quite tight. And obviously when you confirm, like with a 4-hour order block or a 1-hour void or whatever you're looking for, and you're taking a trade, when the DXY is not taking the lows, but EU is taking the lows, this is that breaking point, right? Not so?
Yes, yes.
Why is it, Emmanuel? Why is that the case? Because this void here is this void here, but in reverse. So while the one is a bullish void, this one is a bearish void, right? Right?
Correct.
Right, correct.
Okay, so then when this high gets taken and this low doesn't get taken, that is SMT. So when price trades into this inefficiency and above this, whatever, 5-minute swing high, 1-minute swing high, or whatever, you are coming in here and looking for a confluence. Okay, so we are going to pay attention to this little zone here on the lower time frame, because now the confluence tells us that based off of this 1-hour chart, this low was not taken. This low on the DXY was not taken, and this inefficiency was not traded to when this inefficiency was not traded to. So if you're watching this on live price action and you see EU trading in here, but the DXY not, let's just remove this line here, otherwise it's going to get confusing. So when you see EU trading into this section, but the DXY not trading into that section, that is a confluence immediately in live price action. You'll have to test this, get familiar with it. But when you see this happening, you are looking in here on the lower time frame, whatever you want to pick your poison. If this was the 5-minute, you are going to use maybe a PDA that you find in here. I don't know, pull a fibs, look at a void that closes, test an order block, create a mitigation, look for a breaker, turtle soup the high, I don't know, whatever you're going to find. Or that's 1-hour confluence. Well, if that's 1-hour confluence, and that's the zone of the 1 hour, and we know that that zone is not traded to on. Does anyone see anything here that we can trade from? No one. So this is the void on the 1 hour, and there's no void on the DXY. So when the DXY does not trade into the void that EU trades into, that is a non-symmetrical market move. So everything above this high here and inside this inefficiency is sells, because the market should be moving symmetrically and it's not. So we are looking for sells, and whether it be a 5-minute, a 15-minute, a 1-minute, whatever your poison, you've come from the 1 hour and you're on the whatever time frame to enter, you're going to look for reasons to sell. You've confluenced with an SMT, now you are confirming with price action. Anyone don't know what's going on here? Does anyone not understand?
From the current price where the EU is, Okay, after closing that bit of void, then the price drop down and consolidate over there. So for me, okay, we can call this a consolidation, right?
Over here.
No, go back to where the price has closed a little bit of that FAT.
Okay.
Yes.
Yeah. What about it?
Can you zoom out?
Zoom out. Okay.
No, zoom in, please.
Okay. What do you want to look for?
Because you were asking about looking for a sell opportunities.
Okay. Yeah.
Yeah, because from there, from where the price closed, then it dropped and consolidates. So for me, this bearish order block that make the price to move away from the consolidation, that will be like a mitigation block, right?
This over here.
Yes.
Well, that's an order block on its own. So, for example, when price gets here, or if it gets here on EU, does that same zone get there on the DXY? And you can watch that. Go practice that, like now, and watch the price action for the next hour and see what happens or the reaction. Not to trade it, just to watch this reaction.
Yes. Yes.
Go and watch what happens. That if the one closes this void, does the other one close the void? And if they are both closing this void, then it's symmetrical. But
It's
if
symmetrical.
the
Yes.
one does not, then it's non-symmetrical, then it's SMT, then it's either a sell or a buy based on what, or sell if you're trading EU.
All right. Right.
So what could happen is that over here is this high, right? Which is this
Right.
current lower time frames external range liquidity. Okay, so this is a void, and if price comes in here and takes this external liquidity, which is this external liquidity there, okay, if the one comes in here and the other one does not, so for example, let's say that EU trades higher and takes out all of this consolidated liquidity and some of this void, but this DXY does not and does something like that, then the expected reaction is going to be this and this. That would be the expected reaction if the one does what the other one does not. But if they both do it, then it is symmetrical, then this is not going to happen. I can't tell you it's going to happen because it hasn't happened yet, but you would have to wait for one of them to react. That's why many people say to Michael, oh, well, he's just saying that if this happens, then this is going to happen. And if this happens, then that's going to happen. He doesn't actually know what's going to happen. And that's true because you have to wait for the price action because we price action trading. We don't know what the next candle is going to paint, although we can predict it or try and anticipate it. We don't know. But that's why we have to understand how price action works. If there's manipulation, there's a lot of factors to deciding what it is and what isn't happening on the chart. And if you are one of those people who say to Michael, oh, well, you don't know what's happening, that's because you don't understand the entire picture. When this is painting a much more broader picture now for most people. And well, there's actually an SMT happening right here that I didn't see, or only saw now. Does anyone see it?
Yes, you can see that. That's
okay.
Equal high on EU.
Yeah, there's an equal high on EU right here. So there was actually an equal high right there. Okay, so if that's maybe a 5 minute, or that could probably even be a 15 minute over here. Let's just do live price action over here. So if this is the, let's just make this a little bit more easier to see over here like this. So if price made sort of equal highs over there, over here, that one made a lower low. Okay. Anyone see that? Anyone don't see that? Equal
Yeah, I can see that.
highs, lower low. Equal highs, lower low. Okay, so that on its own is a confluence. Okay, so if we were to draw this out in time, this is that high that made the equal high, and of this high, this is the low. So when it moved below this low, this is SMT, and this is SMT. So when the DXY was trading lower here, and we looked and watched, say, for example, the 1 minute, the same thing. What is happening here? Well, at the highest point sits liquidity, and then your old high and rejection block over here. So even on this red line, which is the SMT part over here, there is an order block over here on this 1 minute chart. And what does price do? It traded into the order block. This is a confluence, so that means that the DXY is already creating SMT while the EU is not trading higher than that high, so that is SMT. And now you use a confirmation. So if the SMT is the confluence, then this is the confirmation, either this order block over here when it made the equal highs, traded lower, and then retraced over here. This is something I'll teach you in the future, but this could represent some kind of what you've seen on my chart over here as RSMT over here, but that's for another time. But over here, that would be something, a confluence, which is your SMT, and then it sells, and then a confirmation as the order block or the void over here as a reason, the confirmation to sell. Obviously, this is just like lower time frame stuff, so these little swings of price over here is not really that significant. But if you were to do this on like 1 hour or whatever, then it's going to carry more significance. Okay, but this is also how you get better entries. So if you're using like a daily chart or a 4-hour chart to give you bias, and then price trades into that bias, that's effectively how we're going to take the trade. So next, we're just going to take like a 5-minute break, and then I'm going to explain to you or show you an example of a trade setup that one can do regarding or relating to confluence and confirmation. And that's what we'll do next. So go grab coffee and whatever, cigarettes, juice, whatever you want to do. Divakran, I see you got a hand up, but we'll take it next, okay? So guys, 5-minute break. Okay, so what I'm basically drawing here is really just a simple structure, but if we label this structure, okay, over here, there's a reference point. What reference point is this, guys? Number 1?
Old high.
Correct. That is an old high over here. Okay, so if that is reference point number 1, old high, then what is likely or potentially this reference point over here? Number 2.
OB.
Yes, that's an OB, potentially an OB over here. Okay, so if that is the old high of institutional reference point number 1, and number 2 is the institutional reference point of the order block over here, this would likely just be a bearish order block. Okay, then number 3, what would number 3's reference point be?
Void, there's a gap.
Exactly. So somewhere here, potentially anywhere maybe lower than the order block, could be sitting a void, because maybe price, did that. Okay, so maybe there's like a void here, and then this would be your, if this was bearish, what would this be? A CB or a BC?
CB.
Yes, a sell side imbalance, buy side inefficient, which is a bearish liquidity void or fair value gap, a bearish one. Think, if you forget this, think as the S in terms of sell. So it is a selling void. So that's how I try to get everyone to remember it, because sometimes they get confused and they mark a bit.
Yeah, it's a bit confusing.
Yeah, so when you say it's a SIBI, just know that it's a bearish liquidity void, because the S in SIBI is for sell. That's how you easily remember it. And if it's
That's why I mark myself as a void to sell. So if it's up.
okay, so you say that's a SIBI. Okay, so I've got the 3 institutional reference points now. Does anyone know or can think of why these would be institutional reference points? Can anyone start to put pieces together on the chart of what we've just explained for the last 80 minutes as to why this would be institutional reference points?
I'll add something then, and then definitely on old highs, we know that institutions understand that there's liquidity up there.
Mm-hmm.
So that's the one thing I'll share there. I can leave some for the other guys.
Okay. Anyone else want to add anything?
The market makers, they like to go back to buy from the premium.
Yeah, because it's a reference point. So we understand that when we mark out these 3 reference points, that when price returns to one of them, we can look to what? Sell it, right?
Yes.
Okay, but now if this is your PDA, right? So we got an order block, we got an old high, and we got a void. If this is PDA, if this is price, how can we confluence this?
SMT.
Yes. So if this is the structure on, let's say this is DXY. Okay. And then over here, we were looking at GU. What would we want to see on GU that would confluence this structure?
Equal lows and mitigation.
Yes. So if this is what we are looking at on the DXY for the old high, the OB, and the void, okay, and we wanted to sell one of these 3 institutional reference points, then what we should understand that should happen is that either GU should make equal lows or a
Mitigation.
higher low. Yes. Okay, so then our SMT is occurring. Let's just get another color here. So our SMT is occurring over here and here. Equal low or higher low. Okay, so if that is the occurrence on whether it be a 5-minute, a 1 hour, a 4 hour, a daily, how many times have you guys tried to sell a void, sell an order block, sell a high and been stopped out? Countless times, right?
Yes.
Okay, so I want you to, from this point forward, only take trades that give you SMT as part of the order block. So from this high on the DXY to this high on the DXY, there must have been SMT on GU, so equal low or higher low. So obviously we don't trade the DXY, but because we've got this 3 institutional reference points that created SMT over here and SMT over here, either the equal low or the higher low, okay, we are looking to trade this institutional reference point. So either the void is going to close, the OB is going to be retested, or the high is going to be taken. So the next time you consider taking a trade, an SMT has been created, what is going to happen? Well, price is going to return back to the OB, the old high, or close the void. And if this is SMT and price sells, so we get SMT and price sells, what is going to happen? It's going to either, the DXY is going to return to close the SIBI, test the order block, or, you know, capture this old high. So you want, because we're trading GU, obviously something similar might happen. Maybe there's a void, maybe there's an order block or something like that. But let's say there's a order block, okay, and we've identified the order block in the corresponding DXY movement. We want to take this trade, and because it is SMT, when price returns back to the void, returns back to the order block, or comes above this old high, what are we looking for? A return back to SMT. A return back to SMT. What is SMT? SMT is institutional market structure. It is manipulation. It is evidence that the market makers are buying to sell or selling to buy. So when price returns back to SMT at the previous level of SMT, or the void, the order block, or the old high, that is a return to SMT. So what happens at a return to SMT? Guys, anyone? What happens if SMT is created and that market structure is created, old high, old low, and it returns back to SMT? What can we anticipate after RSMT when it's returning into these 1 or 2 or 3 institutional reference points? What can we expect?
Sell.
Yes, we can expect to sell. But what could we wait for when price returns to one of these objectives? Let's say hypothetically that the void and the order block are at the same level, right? And price on the DXY retraces into the void, closes the void, and tests the order block. Okay, and we want to try and sell this now. So what has price done? It is SMT'd. So there's an SMT here. It sells. It's returning. So here's SMT. Here is RSMT, because it's now returning to SMT. And obviously RSMT is not only limited to closing the void, testing the order block. SMT can even be above the high. We can still get SMT above this high because that's still a reference point of where they previously sold. So there would be liquidity there. Okay. Obviously, when you're trading the void or the order block, that's internal range SMT or SMT. Or if you're trading above the old high, then that's external range SMT. But it's the same thing. It's still a reference point of 1, 2, or 3. So SMT, RSMT, and then what can we look for again when it's returning back to SMT? Come on, guys.
Reversal.
Too much feedback, Divakaran. I can't hear anything. Does anyone want to try and think of what we could look for when price is returning back to SMT? Okay, so what are the 3 institutional reference points? Old high, order block, and a void. So one of those 3 PDAs is a selling.
Tested.
Yeah, it's going to be tested. So one of them is possibly a premium array, and you want to sell it. And returning back to an SMT array that is an institutional reference point, not just any order block or not just what you think is an order block, but an SMT old high, an SMT order block, an SMT void. This is RSMT, not just any order block, because not all order blocks are order blocks. So this is what I'm trying to get across to you here, is that if there is an order block that is SMT, this is a true manipulated order block for a buy to sell or a sell to buy. This is the difference between an order block versus just what looks to be like an order block. Okay, probably no one knew that, but now you know it. So when price creates SMT, old high, order block, or void, it is returning back to one of these three institutional reference points, which is RSMT, because SMT is those three institutional reference points. And if it's returning back to one of those three institutional reference points, it is returning to SMT. So if it is returning back to a already previously created SMT, what can we expect from price when it returns back to SMT? What can we wait for? That when it gets in that zone of our void closure and our order block we retest, what can we wait for?
Oh, it anticipate a sell, because if it was a bearish SMT,
Yes, that's true, Roger. We could anticipate a sell, but in terms of SMT, RSMT, what?
SMT.
Again, yes. So SMT is created, and as a byproduct of being manipulated, they created an old high, an order block, and a void. Okay, not maybe all three of them, but maybe one or two of them. Okay, and obviously it's just reversed if it's bullish, but let's just do the bearish one for now. So we can wait for new price action when it returns back there to create new SMT. New SMT price action. We don't know that SMT is going to be created when it gets there, but if it does, that is another overlapping confluence on top of the already confirming sell order. We wanted to sell there because there's a void. We wanted to sell there because there's an order block. We already knew that SMT had occurred there, and they sold it as evidence of manipulation. So price is returning to the SMT to close the imbalance, to test the order block or penetrate the old high. And when it does so, we wait for new price action to form SMT. SMT, RSMT, SMT. And this is it. This is all that you really need, because it creates SMT, it returns to the SMT of the three institutional reference points, and when it returns there, you look for SMT. And SMT, if this is a 4 hour, so let's say this is an H4 structure over here, and this over here would be your order block, your void, etc. So when it tests one of these levels that you wanted to trade from to be a seller, it has now created the SMT on a 4 hour. It is returned to the SMT on a 4 hour. You can use this SMT over here, this SMT new price action on anything lower, 4 hour also, anything lower than 4 hour also, to create new price action SMT, be that a 1 minute, a 4 hour, the same, a 1 hour, I don't know, 1 minute, 30 seconds, whatever is your poison. This is new price action. New price action, new price action, SMT. So this SMT occurs first, then price returns to the already created SMT, which is RSMT, and when it returns there, you are looking for new price action SMT on the lower time frames to give you a confluence to sell. Emmanuel, you had your hand up, I think. Do you have a question?
No, you just answered my question. It was that when the price comes back to the old SMT, so we have to wait for the new SMT to be created, like a new price action. So
Okay.
this is the thing that you were answered just now.
Okay. So previously, Emmanuel, you probably tried to sell order blocks or close a void and then sell. You've probably tried to trade ICT, right? And maybe there's a lot of hit and miss, right? So there's still going to be hit and miss because you're still going to get it wrong. But all I'm showing you is something that you can use as a sort of a bonus or an added layer of a reason to take this trade. because
Yeah.
you've got the confirmation that there's this order block and void there. Now you want something else to tell you this, and that something else is that new price action, SMT. So next time you try to sell an order block or buy an order block or close a void or etc., whatever you've been doing, use SMT to assist you. So that maybe you were getting 5 trades a week, and maybe now you'll only get 2 or 3 trades a week. It's less trades, but it is more quality over quantity.
Yeah, but it's true because after everything that I'm learning from you, I don't take much trading. So it's like even my buy limit and sell limits, they are fewer than what I used to do before.
Okay, and that's just a filtering process. If you are taking 10 trades, you get better, you take 7 trades, then you get better, you take 5 trades, because you don't just see so much price action because it's not always clean. Even if you did have good risk reward and your accuracy wasn't too bad and you were taking 10 trades, you might now be only taking 8 trades or 5 trades, but it's more quality trades than it is.
Exactly.
Yeah. So what I was saying is that if we do have this structure over here of that old high, so let's say we repeat that structure over here, and we've got the old high over here, and we've got maybe the OB over here, which is the OB, and this would be over here would be the void, like this. There's nothing stopping price from trading into either of these three. Okay, so for example, we wanted to be bearish and we had like confluences and confirmation telling us that we should try and sell. If we try to sell at the void and we get it wrong, then we'll try to sell the order block if we get it wrong. If we get the order block wrong and we try and trade the old high, then that's the next PDA of the array, because you've tried the void, you've tried the order block, now you're trying the old high. If you're wrong, you're wrong. Okay, either you, of the 3 institutional reference points, you're trading just one of them. Choose one. I prefer to trade higher up, so either I'll try and target external range liquidity or look for lower time frame similar structures over here than down here, because you're further away from that old high. So the same would happen on the 1 minute. On the 1 minute, even though this is a 4-hour SMT, over here, from here to here is SMT. If you were to zoom in over here on this old high, you'd probably find a similar structure on the 1 minute where it creates the ultimate high, the OB, and the void. And what I like to do is look for this void over here, and I know that it's already a higher time frame SMT and they sold, and when price returns back over here to RSMT, I'm waiting for new SMT, and that could be in the form of whatever, this high to that high SMT sell, or take the high SMT again, because remember SMT can occur above the high again because it's already SMT'd, or the order block or the void. And let's just have a look here. I did mark up one this morning on where I think it was, oh, here we go. So there was this one this morning over here. Yeah. Okay, so SMT over here, I think it was on a 5 minute or a 1 hour, I'm not sure. I think it was a 1 hour, 1 hour or 15 minutes, one of the two. But anyway, SMT, sell. So what? Old high, order block, void. There's one over here, which is, I think, the 1 hour. There we go. So over here is the void. This is an old high, and from there to there is SMT, so buy to sell. And again, I like to trade old highs, turtle soup above highs, so I want to have liquidity and then sell. That's up to you if you want to trade a void or an order block or old high or old low. That's entirely up to you. But the same principle is made, is that this is SMT. This is a return to SMT over here. And when price gets here, is there new SMT? So I don't know. I didn't actually look at this chart when it created this high, but let's have a look and see if there is over here. So that was GU. Okay, so this is that 1 hour over here. There. Over here. So I actually found that SMT on the 15-minute, which is here. You could see that over here it trades lower and GU is trading lower.
Darren, how did you bring two charts here on
Sorry?
a single layout? How did you plot two charts on a single layout?
Like this. Well, with TradingView, you just click on this compare button here, and then you type in whatever symbol you want to compare it to, and then you click over here on new pane, and then it puts it on the bottom here if you want. That's what I do. Okay, but anyway, SMT over here, you can see there from over here to here, there to there, SMT, there to there, SMT, there to there, SMT. What is a byproduct of institutional sponsorship? An impulsive move, which is this. So we know that that's proper SMT, buying in the sell. Why? Because they sell to buy. So they're buying when it's going down, and then as a byproduct of that, there's this void here. So we know that there's some kind of sponsoring of price going on here. Without that, there wouldn't really be any kind of SMT here. So this was just sideways price action. You want to see this displacement of price. One of the first things we learned about identifying displacement. An impulsive price action is a byproduct of sponsorship from an institutional level. So without that void, this would not be a valid SMT over here. Why? Old low, order block, void. You must get that. Otherwise, it's like a negated trade. If you don't get that void, then there's no backing behind the reason. So anyway, there's the SMT, and then that same SMT over here on GU. And then because we know that that's where they sold from, we come to the conclusion that on the 1 hour over here, that's that area where they sold from. They buy to sell. So what happens? They buy to sell. So order block, old high, void. So you either trade the void, the order block, or the old high. So I prefer to trade the old high, which is also so happens to be in a previous institutional reference point of this void here. And then boom, there you go, which is that section of price right there. Old high, order block, void, and then boom, SMT, RSMT, because it's returning to these reference points. And then when it returns to this SMT of this previously created structure, does this price action over here create new SMT, which is something you've probably seen in my chart. I just do this. So I'll mark up the zone and I'll say SMT, and then that's before it happens. Obviously now it's already happened, but you've probably seen my charts. I put like a question mark there because I don't know if it's going to create SMT when it gets there, but if it does, then obviously I want to take the trade. But that is why I put the question mark there, because I should expect it returns to SMT, and then when it does it create new SMT? So let's have a look there. We knew that we would be a seller above the old high, closing this void. Let's just put this out here, make it a little bit easier. So there's the void. Let's just put this line there. So we know that's the 1 hour. Okay, so we know that's the void. We know there's an old high to pair up our order, and generally I won't take an SMT trade unless there's like some kind of liquidity to be grabbed on like a 1 minute or a 5 minute or some kind of consolidation or little equal highs or something. Okay, I generally like to pair up my short above an old high because obviously there's a intermediate term high, short term high, and hopefully you know those things. I'm not going to go into detail about that, but anyway, that's long-term, intermediate, short-term highs. So basically some kind of pairing of orders over here to the buy-side liquidity, and then when price gets there, does it create new SMT? And actually I can see SMT creating right now on the 1 hour, because if this is the sort of the price action over here that it should be trading into, then why is the DXY sort of not trading into down here? You can see that void didn't even get closed. So while the GU is going up here, why is it not coming back here on the DXY? Because if this is the candle over here, these two candles, then these two candles here, you should expect that the DXY comes in there, and it's not. But anyway, regardless of that, let's look at the 1 minute SMT. Now it's going to be quite difficult for maybe some of you guys who are new, but basically what we can say is that this line over here represents that 1 hour SIBI above the old high on the lower time frame, so that when price gets there over here, what is happening on this 1 minute time frame? So if we go look at a closer view here, when it gets there, what is happening? So if you've understood what I've said about price action using candlesticks or not, you are basically looking for a reason to sell when it gets here for SMT. Okay, and based on SMT over here, I can see a 1 minute SMT right over there. Anyone can't see that? Does anyone not see this SMT over here? Anyone? Okay, so hopefully you all see that that's
Can you explain to me? Can you just explain that to me, Darren, please?
What must I explain?
I can see that Dixie, they made actually a high and low.
Yeah.
GP,
and GU
yeah,
was making higher highs. So
higher highs.
isn't that SMT?
Higher low? Yes. Oh,
okay. So
got
at an already higher time frame, confirmation of a void, which is a 1 hour void, above a little swing high, because we zoom out here. Oopsie, too far. Over here, there's some swing high. Over here, right? Swing high. Over here. There's this little highs here. Okay, and that's quite substantial. This little move here, while it was consolidating, not coming above these highs, would have accumulated quite a bit of liquidity there. So that's enough to pair an order that is buy-side liquidity to your sell that you want to take, where this is a 1 hour SIBI over here. So this is a 1 hour SIBI with these highs over here, and price is returning to SMT, and we know it's already SMT based off of like 15 minute, 1 hour, etc. So that when it gets there, it is creating an RSMT because it's returning to the SMT previously created, and new SMT is being created over here. And I can actually see on this 1 minute chart, there was another one over here where the DXY over here made a lower low, but GU did not. Over here. So that too is SMT. And you can actually repeat this process over again, because we already know that the 1 hour has SMT'd, okay? So we expect that that SMT structure, being the old high, the void, the order block, should be traded back to, which it does. This new SMT formed on the 1 minute, and as a result of this SMT, they sold, so this structure should be returned to old high, order block, void. Return to SMT, SMT. So, SMT, return to SMT. Why is it returning to SMT? Because over here they sold from a previous SMT, and now in the 1 minute they are creating SMT, and as a result of selling into up close candles, they create SMT and old high, order block, void. This structure should be RSMT, so that when price returns to the SMT, does new SMT form? And yes, it does. SMT forms at the new price action right there. So we just repeated the whole process that we just did now. So this is a higher time frame version of it, where this is SMT over here. You can actually pretty much see even over here on this whole bigger 1 minute chart over here, there was a SMT over here, and then price returned to the structure where they sold from. And even over here, there's an SMT. So we anticipate this is a higher time frame. So this higher time frame SMT is returned to, new SMT is created, and then we just repeated this whole process of SMT, RSMT, SMT on the lower time frame, and then we took the trade. And you don't have to do this process again on the lower time frame. You just need once to say SMT again, but you can repeat this process again if you want to tighten up stops. Okay, because the difference between just taking a trade here and putting a 15 or 20 pips is much more significant than doing this again, where you can put like 4 pips or 3 pips or 5 pips or whatever is less than 10 pips basically. So you can significantly tighten up your stop based on what I'm showing you here. And this, guys, this is obviously repeatable onto any asset class. I'm just showing it to you because I just trade GU mostly and EU, but it's repeatable on any asset class. And that's the same Thivakran on gold as well. If you want, let me just see here. If I can repeat the process. So let's find a 4-hour SMT and old high, order block, etc., etc. Let's see here. Okay, so this is inverted. Let me just see if I can quickly find one here for us. Let's just zoom in here, maybe recent price action. Okay, so in actual fact, this one over here is currently happening right now, where we've got this sort of structure here, where it made this equal lows over here, and then it made a higher high over here, like this, something like that, there and here. So while this one was going up, this one was sort of mitigating, making equal lows, and then it's a buy. So what do you get? Old low, order block, void, and then RSMT, SMT, etc., etc. Whole thing plays out again, except it's different now. Instead of returning only to the void and the order block like it did over here, it's coming above the high. So again, just because it's going above that old high doesn't negate this trade. What's happening is, look, Thivakaran, order block, old high, void, return to the void, use that PDA, return to the order block, use that PDA, but it's trading into the old high over here. So SMT, RSMT, SMT, new SMT at previous SMT, RSMT. It's going to take a while, guys. I'm just showing you this now, but rewatch this video. You'll get it, promise you. And when you get it, you've got it. and if you've got it, then you don't need me anymore. But that's where you should be. So the next time you take a trade, incorporate the SMT. And yes, sure, there's going to be times where price did the exact what you wanted it to do, but there wasn't an SMT confluence that you could see, and then that's just how it is. But I'll definitely say that you'll get less trades, but there'll be more quality and more pips, if that's what you are in line for. So it's been we spent this whole lesson just doing this one thing, and this one thing can help you significantly. So you need to, from now, start incorporating this, if you weren't, into your charts. And obviously I'm doing silver gold or EU DXY, GU DXY, but you could do CAD, JPY with JPY index. It's really up to you. I've got a whole list of ones that you can try. If you know, you could do USD CAD, DXY inverted.
Please, can you send us the list?
Yeah, it's just a couple. You don't need a lot. You really don't. If you're gonna do and spend as much time as you will on looking for these setups, you really only need